It's The Loan Show on KSRO with George Adair. Call in with your questions now at 636-1350.
Hey, good afternoon. Sonoma County, I'm here, George Adair, live, The Loan Show on KSRO 1350. Thanks for joining us here every Wednesday at 12:30, where I talk about everything that's not so interesting and try and make it interesting.
No, I think it's pretty interesting, though. I mean,
You're just saying that.
It's your money. Of course it's interesting.
You just know that the next 29 and a half minutes will be very awkward if you didn't say that.
Probably right.
Yeah. Michelle's here, my co-host, of course, always here to give me a pep talk. Hey, give us a call. We're live in the studio at 636-1350. That's 636-1350. Take in your calls, if you will. I want to answer your questions about the current mortgage market. I want to answer your questions about financial markets. There's been a lot of buzz out there about the recent IPO. If you could call it that, there were some technical difficulties that definitely put some constraints on people's ability to buy into the IPO. So I don't know if it was a true public offering, in my opinion.
Partial public offering.
Yeah, I think it was an initial partial public offering, IPPO. I'll talk about that in a little bit. And then I have a guest with me today, Rob Mokry, a Farmers Insurance agent, my insurance agent, for full disclosure, and also a great insurance agent for many of my clients. So Rob is in the studio. Say hi, Rob.
Hi, Rob.
Hey, Rob. Are you looking in a mirror, Rob? You just said hi to yourself. We'll bring Rob in so he can talk and answer some questions for you about insurance and how it impacts maybe the property you own or the properties you wish to own, or maybe the properties you wish you didn't own. Rob can answer questions about that kind of stuff. So if you have insurance questions about hazard insurance, flood insurance, earthquake insurance, pet insurance, auto insurance, Rob can answer 4 out of 5 of those. And call us here at the studio, 636-1350. 636-1350. Okay. I don't know about how many of our listeners suffered the dire consequences of anxiously watching and waiting for the opportunity, quote unquote, to buy Facebook stock on Friday. Michelle, did you buy any?
I thought about it, but then I'm like, what? I'm going to buy 2 stocks? What is that going to do?
You only had $68 in your account?
Yeah, I was like, probably not worth it.
Yeah.
And then I would have lost money, too, so, hey.
No, it went up.
Did it go up, and then it went down?
And then it went down, and then it went down,
and then it went down
again. And then today it went back up. I don't know where it is today. I vowed to stop looking at it. I got to tell you, folks, I wanted to just shed some light for those. We don't usually talk about unsecured investments here because – hey, robo trading has really taken over the stock market, in my opinion. And today, I think a better place to put your money is in real tangible assets like trust deed investments, or put your money into bonds or CDs, something that maybe is more stable than a unsecured stock. But most importantly, I like to advocate putting your money into buying real estate. That's because I'm a real estate broker, and I have a real estate license, and I also have an NMLS license, which is, in case you don't have your mortgage jargon dictionary in front of you, means I can practice mortgage lending. So as I do that, I thought, hey, you know what? I can take a stab at buying Facebook. I'm a smart guy. I got a business degree. If I was wearing suspenders, I'd put my thumbs in them and snap them. But I'm not, and I'm not that smart of a guy, because I did try to buy Facebook stock. Hey, Rob, did you try to buy Facebook stock?
No, I didn't, but I do know a few people that did.
So you're saying you're smarter than me?
No, just saying I didn't care to invest money into Facebook.
I didn't care to either. I was going to try and get in and out. We got this IRA. It's just sitting there. I haven't had it in stocks. It's been sitting there doing nothing. And, I ended up using it to get in. And, folks, I often talk about how I drink my own Kool-Aid. I should have drank my own Kool-Aid on this one. So I put in this meager investment into Facebook stock, and I watched all day as my order wasn't fulfilled. It wasn't fulfilled again and again and again. Fortunately, I put a limit order that was to expire at the end of the day. Well, NASDAQ had not placed or not confirmed any of the orders that were traded. This is what my brokerage told me, is that NASDAQ hadn't confirmed them, and then over the weekend they did confirm them. So my broker went back in and withdrew my funds, and I woke up on Monday. Now, I don't know how many people in this room have ever bought stock on Saturday, but I did. Yeah, you know that the market's closed on Friday at 1 o'clock Pacific time, right? Well, somehow I bought stock over the weekend. And Anyway, so, this is a great segue for me to talk about how do I bridge what my follies were on Friday with Facebook and the fact that I lost about $1,400 with how do I translate that into what's happening in the mortgage world? Well, first off, let's talk about this. I had to go through a broker to make my trade, right? My broker was Scottrade, and they have my best interest in mind, supposedly. We will see how this all shakes out. I'm certainly working with them to see what my options are. And they're a conduit to really what's like a secondary market in NASDAQ, right? I don't have the ability to go to NASDAQ direct because I don't wear a fancy coat and walk around on the trading floor, right? I think there's only some 50 some odd people that do that. My broker has an obligation, right? But they also only have so many controls, and they're constrained by their relationship to NASDAQ. So right now they're saying NASDAQ's the problem. Well, folks, it's the same thing in mortgage lending. It's the same thing in insurance, and I'm going to ask Rob about this later. When you go through an intermediary, instead of going direct to a lending source in the mortgage world, you have to deal with overlays. You have to deal with not so much of a transparent process. So I'm dealing with an untransparent process of buying stock when I thought I could cancel the order, couldn't cancel it, and then I ended up getting the order over the weekend, right? And this is happening to a lot of people. Well, the same kind of thing happens when people go buy a house. Today I was just excited to learn that one of my clients got an accepted offer amongst 11 other offers. And one of the primary reasons the offer was accepted is because we issued a purchase loan guarantee, which says that we can perform as the lender. We're a direct lender. I make direct credit decisions at Bay Equity Home Loans, right? Had to get that one in, folks. Bay Equity Home Loans. Your home for loans, located on the corner of 4th and E, downtown Santa Rosa. Anyways, so as a direct lender, we make credit decisions, right? Well, brokers don't have that ability. So when you go as a consumer to get a refinance or a purchase loan and you go through a broker, they don't have control of what happens with the lender that they use to fund your loan. They're an intermediary. Just like Scottrade's an intermediary to me and NASDAQ, or really not NASDAQ. NASDAQ's an intermediary between me and they're just a conduit between me and the actual company that I'm investing in, right? Same thing in mortgage lending. So when you're thinking about how to proceed with getting a mortgage, use the Facebook story as an example of why working with a broker can be problematic. Yeah, it's a leap. It's not a straight line. It's a dotted line with maybe some bigger gaps than others. But I wanted to at least somehow be relevant to today. Let's see, what time are we looking at here? There we go. My clock has been moved on me, folks. So a couple interesting points if people were wondering what happened with Facebook. I like to just sort of like put it out there as to the basics and the reasons. I think what happened was a combination of 4 different things. Now, we've done some research, and basically Facebook was already semi-public. Investors were already putting money in and taking money out before the IPO even started. And they kind of got greedy. And what happened was Facebook decided to offer more shares right just before they opened the market. And when they did that theoretically diluted the value of Facebook. And all day people were talking about, they nailed the purchase price. The offering price at $38. They nailed it, right? Well, no, they didn't. It was actually overinflated because it should have gone up more. There should have been more demand than there was supply, and it was the opposite. Another thing is apparently General Motors spoiled I don't want to say spoiled the party, but essentially pulled out advertising from Facebook 2 days before.
That's right, they did, yeah.
Now, let's talk about secured company versus new startup company. Facebook's business plan is not mature. It's evolving, right? Mm-hmm. And so they basically lost one of their primary investors, which had a major impact on their ability to generate future revenue. And then finally, the hype that the news was putting out there didn't end up attracting as many investors as they thought it would. But I think there's a 5th reason, and that is I think that a bunch of the orders didn't get fulfilled. And when they didn't get fulfilled, it skewed the valuation of the stock. People were trying to buy that didn't know whether they had bought or not, and then they couldn't buy and then resell. And so the actual price of the stock didn't evolve with the true demand So you had a bunch of shareholders like me that were out there wondering if we actually even owned the stock.
Yeah.
I mean, I was watching a live thing on one of the business networks, and there were actual traders on the floor saying, can someone tell us whether or not our trades are actually going through or not? Craziness. So, folks, what does that mean? Don't buy stock, buy houses. You call us at Bay Equity Home Loans to get pre-approved because we're a direct lender, right? But we are taking your calls here. In the next segment, we're going to be talking with Rob Mokry at Farmers Insurance, and our number live is 636-1350. If you have a question about your homeowner's policy, if you have a question about maybe you're an investor and you want to know whether or not you have the right insurance on an investment property, maybe you have a condo and you're wondering if you have adequate coverage. I found out by just talking to Rob the other day that I didn't have the right coverage on one of my investment properties. So we're here to take those questions. And then, of course, in the last segment, we'll talk about the Bay Equity Refi Jackpot winner. We've got a good one today. And so we're going to go to break here a little bit early, and then we're going to talk to Rob Mokry. So stay tuned for an interesting conversation with Rob Mokry of Farmers Insurance.
To find out more about Bay Equity Home Loans, call George Adair at 707-583-8100. That's 707-583-8100.
Hey there, Sonoma County. If you're paying over 5% for your mortgage, or maybe you're underwater with your mortgage, you need to stop and listen to this message. I'm George Adair with Bay Equity Home Loans here in Santa Rosa. We're helping homeowners save hundreds every month and thousands every year. Today's low fixed rate is only 3.875%. You heard me right, 3.875%. Call Bay Equity today at 583-8100. Don't delay. Call us today at 583-8100. We can show you how refinancing into a low fixed rate can save you thousands on your mortgage. Please call 583-8100 and call and ask about the new refinance program for homes that are underwater. The time for a low fixed rate home loan is now. Bay Equity is your home for loans. Call us at 583-8100.
30-year fixed rate APR 4.09. Licensed by the Department of Corporations number 6053919 and MLS number 238915. Equal housing lender.